Mr. Benga.
Hey, Abdul. Abdul, you're the quiet lurker. When I say lurker, somebody who's just lurking in the background. That's who you are. Nigeria will say under G.
Yes, it's not a problem.
Christ.
Wow.
It's working now.
Now that
That's it. Look at how you went to go.
wanted to kill your
Wi-Fi.
boy.
It's working now.
No, I didn't turn it off.
Oopsie.
It's you that I'm
Ah,
Person talking.
as in,
Thank you. Forgot. Oh, the person hasn't been said yes. Hiya. Please mute yourselves. Please mute yourselves.
you can now switch it off if you like.
Guys, please mute yourselves.
I like. It's what I like.
It's gold. I got the person talking. Okay, wow. We've got quite a few people here, which is not a bad representation actually for what we have. Guys, please mute yourselves if you are not muted. Oopsie, I've not heard the cry of a chicken in a long while. Right, so we're just going to wait for other people to join us, give it a little bit, and then we shall get started. We shall start. Danny Skills. No, I love your name, Danny Skills.
Thank you.
We're
Thank
free
you.
last. We're taking to
Anne, please mute yourself. I really need to work this thing out. Okay, I could just mute everybody
for
actually.
medical treatment after they visited the Katsina State government house.
Maximilian, mute yourself, please. Actually, I could mute everyone.
Has undergone a COVID-19.
Good, I muted everybody. You cannot unmute yourself, unfortunately, except you have a chat or chat me up. Right, guys, I've got to say thanks for being with me. Yes, I know we're doing this at the wrong time. The market is there. But guys, if you are trading very well, you shouldn't be there staring at the market. And I'm not here to give any stock pick. I think we're just here to have a chat, really. It's the end of the year. And we shall be having one of these market experience series. Oh, I need to make sure Oracle is with me. So we're waiting for our guests. Hey. So we're waiting for Nathaniel. Okay. So you guys should be able to unmute. Okay. So we're waiting for Nathaniel. And of course, once Nathaniel is here, we'll probably just get started. But on that note, guys, good evening, good afternoon, morning, wherever part of the world where you guys are based. My name is Benga Onifadi. I think a lot of you know me already as Brothers Keeper. And yes, I've been on this journey, investment journey from, oh, Nathaniel is here. Good, Nathaniel. I'll give you a nudge in a minute. Been on this journey for quite a few years now, about 14 years. Some of you are quite, some of you are just, as old. 30% can't make it, unfortunately, no. Oh, no. Okay, do we have Alien here, though? But do you know what? Let's just get started, and then we shall have a chat with, so, Nathaniel, where are you? Where's Nathaniel? Nathaniel? And I'm just going to invite Nathaniel. Okay, so I'm just going to get Nathaniel to unmute himself. Nathaniel, can you join me?
Yes, I am. Yeah.
Hey, look at this chef. Your signal is not disappointing today. Wonderful. Hey,
Yeah.
right, good. What's that? Are you in the class or something?
No, I'm in my room.
Okay, you got a board in your room. That's why you do all this calculation. This guy, isn't that weird? People have somebody having a board in his room. That's a bit sad. I would have thought. You look at $1 billion. Anyhow, just give us a quick
$1 billion.
introduction. gentle introduction about yourself, and let's hope we can, the network doesn't fail us today. Right, go on. Let's get started.
Okay, guys. Good evening and good morning or afternoon, wherever you may be joining around the world. And it's my pleasure to be in this meeting hosted by our very own border skipper. So basically, my name is Nathaniel Diso, and I'm a TV chef for TVC Wake Up Nigeria, a breakfast show here in Nigeria. So basically, I'm a food entrepreneur, and I'm also a Tony Edmelo entrepreneur, and I invest in the stock market. So that's basically just a little introduction.
Oh boy.
Who I am. And I'm single.
Nice. Good to have you, Nathaniel.
Yeah.
Unfortunately, Alien can't make it, and who else can't make
He's in
it?
Jupiter, is in another planet.
He's probably, or he's probably somewhere chasing Yatra. So
Yeah.
But people are sending me questions generally, and so let's just start. What's the market like for you so far? What's the market? And guys, if you have any questions at all, just drop it there, and we shall be answered. So it's like Nathaniel's on the hot seat now. No, it's not a hot seat. What we
No,
just
it's not hot seat. It's just a conversation. We're just having.
I'm joking, but this guy's been on TV so many times, so you can't.
Yeah, sure, definitely.
But yeah, so what's your focus though? Generally, investment focus area.
Okay, so generally, I'm more of a long-term investor, and basically, I buy stocks with the hope of its rising in the nearest future. But basically, because I started low, so I decided to come up with some strategies that would help multiply.
You started low. What does that mean? Started low.
Like I started with like little funds, like with $100.
Okay.
Yeah, so I decided that okay, let me start growing my money, adding more, and with time I get to find out that okay, this particular strategy is not working for me. It's not giving me the results I need presently. Let me deviate to another strategy. So basically, I'm not the daily trader or the short-term trader.
You're not a trader.
Yeah, I actually go long, but I also do it both ways, because there are some opportunities that you get in the short term. Because you are long doesn't mean you should overlook the goodies within the short term.
So the market, yeah.
Once in a while, once I see some juicy opportunities, I dance around, play with it, get my gains, then continue the journey.
I've got to say though, one question. So you're more of an investor, but at the same time you do the odd trading here and there. So just based on what you said, and I know, so I need to answer this question because most of us are on the Bamboo platform. So can you give me one way of winning using Bamboo? Because people always think, oh, you can't do this, and there's good faith violation, there's charges. So give me one way to win, to defeat this thing. How can people do it? That's one question I can't answer.
Okay, so to avoid the good faith violation and to win very well with Bamboo, the best way that I've figured out is not to be doing the daily trading.
Okay.
Because daily trading, you would sell, you buy, sell, and at times the funds will not have settled on time by the time you want to make your next trade. So except if you are depositing more money, then you can continue with the daily trade. But if, example, maybe you have $500 and you use it for some short-term trades and you make some gains, maybe 20%, 30%, and you decide to sell off. So before that money would settle, you will have settled, you will want to use it again. And with that, you are at risk of getting the good faith violation. So one way to do it is not to be doing the daily trading thing, because Bamboo somehow supports long-term investors. Somehow support that, okay, you buy some shares and you keep it, allow it to grow for some months or even years, then you can sell. But the daily, you buy now, maybe 2 days later you sell, and that it doesn't work well with Bamboo. But for other platforms, fine, you can do it. But for Bamboo, just to avoid the good faith violation. Don't do the rapid selling and buying.
So you're saying you can still get along with investing and trading on Bamboo?
Yes, very well. I do both.
And you do both, and you've been winning.
Yes, I've never had a good faith violation, because everything is all about timing. Everything is all about timing. And one of the things that usually make people get the good faith violation, one of the reasons is FOMO. That is the fear of missing out. Okay, you see a particular stock and you feel that okay, it is already rising, like the NEO now, the popular NEO that's been rising, and you feel like, let me jump in. Then in some stocks, maybe you are losing there, you feel like, this is already losing, let me sell. You sell, you buy, then maybe NEO is having some bad run of time, it is down again. So fear is the major reason that would make people to have good faith violation, because we are just in a hurry. You are not making decisions based on logic, and like there's no exact reason that okay, I'm selling because I need this money to serve me in a better position. People don't do that. People don't do that. Most times they sell because it is losing, I'm losing money, and you don't know that definitely this stock would bounce back with time, depending on the stock too. But generally stocks do rise. So yes, it do rise. But the initial fear that this stock is going down, you're losing 3%. That's some people that okay, they've lost 3%, 5%, they're this scared, they've sold their money. It doesn't work that way, and you risk getting a good faith violation.
So get the timing right.
In summary, that's just the way to win with Bamboo.
So I learned two things from what you said. Get the timing right, don't follow the crowd. Okay, somebody said, so it's just a random question, so don't
sure.
Logical way. I could have made it logical if it was mine, but it's just everyone just talking. So someone's actually saying, but how do you guys come up with all these stocks you come up with in the group? So I've never seen these. How do you do it?
Okay, so let me give my own strategy for getting stocks. And one thing that one of the mistakes, it's not necessarily mistake per se, but one of the trends that people do engage in is that once they enter Bamboo, they go for the popular stocks that they know. They just enter Bamboo, they go for Apple, Facebook. I have so many people that have said, okay, because I know Apple, I know Amazon, I know Tesla, I know Google, buying. And funny enough, some with $50 or $100 or even $30, they are buying Amazon, Tesla, and all those huge stocks. So one of the ways to get, it's all about your strategy, because in stock market investments, there are two ways to win, either through the capital appreciation or through the dividend. So that would inform on which stock you choose. If you are going for the dividend, which is what most aged people usually go for, they decide that, okay, I don't want the day-to-day volatility of the stock market. I need something safe. Then you go for dividend stocks. That is your Bank of America, your JP Morgan, and the rest. But if you are like the young guys like me and others, okay, you prefer the capital appreciation stocks, fine. So which sector do you want to invest in? That is another thing, because the sector will not inform which stocks you choose. Are you, okay, I want to go for the EV stocks, I like the EV idea. Then you search, because that is one of the ways you learn. Because nobody comes up with stocks on their own. Nobody creates stocks. The stocks are there. There are over 3,000 stocks on the New York Stock Exchange. So you may not necessarily know all, but one of the ways is your strategy. That will determine which stocks you choose. So
I was going to say you have a preconceived notion of where you want to go, sector you want to focus in, and then
that would inform the stocks. Because if you don't have the idea of, okay, this is the strategy I want to use, this is how I want to make my money, you will not know which stock to pick. And that is what usually make people lose money, because they don't know which strategy to pick. They are just saying that, okay, this person is talking about this stock, let me just buy. You don't know where the bus is going. You don't know the direction. You just enter. What if it is going inside bush? You don't know. So you just enter. So once you don't even know why you are choosing that stock, if it is down, you don't know your exit point. You don't know how to either hold on or cut your losses. So your strategy would inform the stocks you choose. Basically.
Okay, so I've learned something there. Have a strategy, and guys, it says some stocks may be going inside the bush, so be careful, guys. Stocks do go in the bush.
Very well.
I'm gonna steal that from you. Okay, I've got a lot of questions, so let's just try and make it rapid if we can. Okay. Somebody said this is my first S&P inclusion. Or is this the first S&P inclusion I'm witnessing with the unstable nature of Tesla? what do you think we should expect?
Okay, for Tesla,
Yes.
Tesla, as we all,
Whisper this because Abby is here and Abby can hear about Tesla. So whisper. If you're gonna say sell, whisper.
I love Tesla.
okay, so Tesla is a very good stock and is a very good company. As we all know, they are the leader of the EV drive and everything. And there's still a lot of volatility with the EV sector. Like we all know, they are not going to be profitable in the next 5 years, some even 10 years, it depends. And there's still a kind of, will I say, tug of war between the traditional automakers and the EV sectors. The likes of Toyota, Ford, and Volvo, they are going to battle with Tesla. But one thing is that Tesla is still going to win because definitely they are the leader of the pack. They are what some other upcoming EV stocks are looking up to. So the volatility is just because, okay, this is the first time of them being included in the S&P. So something that is the first time, you should expect some kind of volatility. And
so the volatility should be expected either way.
Yes. So
okay, wonderful. Thank you for that. Well, now somebody's talking about averaging down, and I know one that's always telling guys take profit.
Yeah.
So somebody's actually saying, so let's say you're getting the stock at $40 and now it's gone to 80. How would you average down? I mean, how is that going to work in this scenario? So, you know, I'm always there, Brother Skipper, saying guys take profit. So what are you going to tell that person?
Okay, let's say you got a stock in at 40 and it's
doubled. You've got 100% basically.
Okay, averaging down is when I think this is actually average up, because averaging down is, for example, you bought the stock at $40 and it has already dropped to like maybe 32. So it's more like you're buying the dip. So since you bought at 40 and it is now 32. Once you add more units, your average cost reduces from 40 because you are buying when it is losing. So what the person is trying to talk about is averaging up. Maybe you want to go long on that stock. For example, maybe NIO now. You bought NIO at $10. Maybe you bought 10 units, for example, and NIO has already risen to like 20, and you feel that, okay, this stock will still rise up. Let me add more units. So maybe you had 10 before, you are now adding 20 more. Your average cost would not now be 10, to be higher than that. So that question is actually averaging up, not averaging down.
So okay, so in terms of let's just say now let me just hone on that question again. Someone's asking me, so when do you take profits? I'm always saying, guys, take profit. Do you take profit? I need to ask you, do you take profit?
Okay, now taking profits, like I do tell people that everyone has a strategy and this is an individual game. For you to know when to take profits, you have to consider two things: the fear and the greed. You must learn how to control your greed and learn how to manage your fear. This is very important. Okay, now, for example, I had plug stock around July or so, July, August. I bought it at $7-point-something. It was less than 8. So I had plug till like November, and I had gained well over 100% on that stock. But I felt that, okay, I've taken enough from this stock. I need to put the money in another place. That is my own individual decision. So some may decide that, okay, 100, I can still go more. So taking profits, what I would advise is this. Like I said earlier, it depends on your strategy and where do you see that stock? Do you see the stock as a mid-term stock or a long-term stock? Now, if you see the stock as a maybe short-term stock, then you can just take your profits. But if it's, okay, let me use the strategy that I used with Lumina.
But so 1 minute, just so you can wrap up all the answers, because somebody's actually telling me I should rephrase the question.
Okay, so taking profits is an individual thing. It depends on how much, how you want to control your greed. Because some people, 50% is okay for them. They are fine. some 100% is okay, some 20% is okay. So there's no standard rule of taking profits. So it's all that is an individual game.
So for you, what percentage do you consider, or what's your strategy around profits?
Okay, me around profits, it depends on the stock and how long I want to hold the stock. If it is a mid-term, if it's a short-term stock, like maybe the e-commerce stocks, and maybe I want to profit from their quarterly earnings, 10% is okay for me, 20% is okay for me, because obviously you cannot get 100% from a quarterly report on e-commerce. You may never get 50%, so 10% is okay, 20% is okay. But for the EV stock, I can decide to go for 100% for EV stock because it rises high and it's volatile. So like Majors now, which I like so much. Majors, if it is not up to if it is not up to 80%, I still leave it because Majors usually rise
Majors.
Yeah, Majors usually rise high. Like Lumina, I had over 180%.
Oof.
And that was because I sold. That's because I sold. If I didn't sell Lumina, I would have had over 200. So it depends on the stock. So that's what taking profits is.
You didn't do giveaway. Okay, so well done. So regarding taking profit, Nathan's actually, I don't know why do I always call you Nathan? Nathaniel.
Many people call me Nathan, it's fine.
Oh, that's fine then. Okay, so I'm going to call you Nathan. So Nathan, aka Major Lord, has actually said when it comes to taking profit or profit taking, you've got to manage your fears and your greed. 10% or more, he's happy. He's not very greedy. Rather, if it's one that's got to do with with mergers, for example, he just looks at 80% or more. And if he has, but someone's actually asked me as well, what if I want to take a profit and need to repurchase the same stock? What is the implication?
Okay, so now if you plan on buying back a stock and taking profits, one thing I usually advise and suggest is that consider first the price at which you bought that stock and the price at which you want to take your profits from.
Alien
for example,
is here, by the way.
Alien is back from Jupiter.
Alien is just landing, but carry on.
Yeah. So if, for example, it all depends on when you add that stock and the current price. So if, for example, you bought a stock when it is trading at $20 and it has risen to like maybe 35, one thing you should now consider is what is the future of that stock? Why did you buy that stock?
Okay, so before
everything boils down to the strategy I talked about. Because if you are not sure of your strategy, you will not know. So you will not know whether you should take profit now and buy back or still hold it and get some profitable returns. So everything just boils down on strategy. Know why you have the stock, know how long you want to keep it, know the direction the industry that stock is, then you will not decide. Because there are some stocks that you can play around with it. Maybe you add 10%, you buy, come back again, buy, come back. Why there are some stocks that just allow you to grow, like Ijebu Gari, just allow it to swell to a particular stage, then you can now sell off and move on. So everything boils down to strategy.
Our chef loves his references are always food-like. So I hope you guys understand the whole Ijebu Gari. And but the guys who's gonna miss this, it's gonna be on YouTube at some point. So hopefully we can reference you guys. Okay, I've just requested Alien start his video. I think his network is still messing about, but we'll just carry on anyway. So for some time now, somebody said, and this is your area of specialization, what you love. Somebody said, for some time now, I've got my eyes on SPACs and mergers. When a merger date is postponed, is it advisable to sell off or wait for the new date? And why?
Okay. A perfect example of this question is the SBE stock. SBE is the
Switchback Energy. Okay.
Yes, so they were to merge with ChargePoint, which is an EV charging company, and they were supposed to merge 15th December. That is on Tuesday or so, but the merger has been postponed to January 15th. Now, what you should do is to consider when you bought that stock. That is important, because if, for example, you bought SBE at 20 or maybe 18. Now SB is like 35. Even if it has been postponed, you don't need to sell. Because if you should sell, then it's except something crazy really happens, SB cannot go to 25 except something crazy happens.
Okay.
And postponement of merger is different from cancellation. That's another thing. If the merger has been cancelled, sell off your stock, because that is a bad thing. If the merger has been cancelled, sell it. But if it has been postponed, you should also consider the time that it has been postponed to. So Adibin SB was postponed to like maybe August next year or December. That is a bad thing because it's way too far. You can sell off because it's definitely going to be. But it's just 4 weeks away. Now you consider when you bought that. If you bought SB at maybe 32 or 33, and now it is 36, well, you can decide to sell because it is just the profit margin is just very little. But if the profit margin is large, like maybe you bought at 20 or 18 and it is now 36, it has been postponed to just 4 weeks away. There's no point to selling because there's, except, like I said, except if something crazy happens to that stock, it is not going to crash to maybe half of the stock.
Of course.
And definitely, so that is just, you should consider the entry point when you bought it and the current share price. That will not determine if you should wait till the merger or you should sell it off. So
this is free game you're giving away for free. Thank you for that. Alien is here. Let's just get a brief introduction from Alien quickly. And
Hi, Bonus Keeper.
Yo, this guy is a very lovely guy.
My Zoom map, Gary. I had to find a way to fix it up.
Okay, good. Right, Alien, brief introduction, guys.
Alien is back on Earth.
I had to come back for this visit though. At first I was in Jupiter.
Right, brief introduction. Tell people your name, etc. Whatever is interesting you want to tell them.
All right. My name is Ibrahim David, and you all know me as Alien. Okay, this is what Alien looks like. Very, very dark. To Nigeria also, all the way from Jupiter. So I'm that 500% guy. If it's not 500%, I'm not
500% or nothing. People say that's great. So why 500%? Why 500%?
If you're going to risk on a company, it's better you go in fully than to do it halfway. You don't have to wait for the whole 500% to click. You can break it into stage by stage, pattern by pattern, step by step. You get your 500.
Wow. Did you hear that, guys? So what's the strategy? I know without getting technical, you've done it so many times, but what is the strategy then for eating the most? I mean, what Alien is trying to say is that I want to eat the most from this. So what is your strategy? How do people benefit from eating the most from a stock?
See, any stock that is good for long term is equally good for short term. That's one thing I've noticed. And any stock that's good for short term is also good for long term.
Okay.
All you have to do is just properly calculate it. Know when you're about to enter a stock. Like I usually say, for ultra invest on a particular stock. You milk that stock till there's nothing left of it again.
So Alien, for example, profits, Nathaniel says he's happy with 10%. In your case, what do? Are you going to tell him, guy, what's wrong with you? What's 10%?
No, see, the market is friends to everybody. So you can just grab the one you can. If you're satisfied with it, you move on. Then if you're not like me, you continue. But you go into a stock when you see down. When you're gathering it, maybe other people your own gain from it.
Wale, please mute yourself. Let me just mute him. I've muted him. Right, carry on. Sorry, Alien.
So, for example, if a stock is far from its 52-week high, it has more gain to give than a stock that is close to the 52-week high. So, when it gets to the 52-week high, from that period, you ought to be scared because now you're playing rough play. You're gambling. You could lose your money. But once that is far from the 52-week high, the stock has to first get to the 52-week high before it can beat the 80H. Then before you can say, oh, I've made certain amounts of gain from this particular stock, it's time for me to jump.
Okay, so you said ATH. That's what does that mean? Sorry, just in case some people don't understand. All-time high. Okay, guys, I'm still having your questions. So so we can see contrasting views here from Alien and Nathaniel, and it's quite funny. Both views are making money. So Alien, would you describe yourself as a trader or an investor? I know the last time you gave me one gem. I'm that investor who you think doesn't trade. So would you say you're more of an investor or a trader?
I'm both. I'm a vulture investor. As a vulture investor, you speculate like an investor. Then you jump on a stock like a trader. But at the same time, it's for the sole purpose of making gain.
Okay. So Alien's a vulture investor. When a company is dying, that's when Alien jumps in. Yeah, but so Nathaniel. Yeah, go on, let's wait for Alien. You want to say something, Alien?
When a company is down, that's your opportunity to buy. Like presently, we're in the buy season, this December period. Every rally is going to come down and it will pick up back by 2021. So this is the period you find that stock that is down and has more gain to give you by 2021 January.
Okay.
February. When stocks that are down begin to rally, they move really fast.
I think someone has a question concerning Kodak.
Yeah, I was going to say as well. So someone said, sorry, I was just going to ask you first though, Nathaniel, what have you got to say to Alien's view? Because
actually, Alien's views are actually perfect and I love it. But it's not that my own is more like a break. Like, okay, I developed a strategy on how to get that 500%. Because I'm in this game to make money. So Absolutely. If I can't make as much money as I can, I'm not satisfied. But one thing, the fundamental of trading, fear and greed. You cannot say because you want to get 500%. Okay, let's say, for example, now somebody invested with $1,000, for example, and has 300%, or let's just say 200%. That is already $3,000. Now, it will not be wise for you to say, okay, I want to wait for 600% and let go of $2,000. So the strategy that I developed is what I call eat your cake and have it. So what I do is that once it gets to 100%, if I want to milk that, it gets to 100%, I sell off 80% of that stock. So for example, let's say I have 10 units of that stock and I've already gained 100%. I would sell like 80% of that stock using the 80-20 principle. So I've taken my profits, but I still want to milk that stock. So the remaining 20%, I'm going to allow it to continue the bloodline. So it's more like, okay, it's already 20%. So definitely, no matter how high a stock is rising, it will surely dip at a point. So at that point that it has dipped, that's when I'll now launch an assault. So I'm going to enter more. So that 20% is now going to grow to give me another 100%. I sell off again, then continue. So I'm taking my profit and I'm still staying long. So I'm selling off the shares, but I'm still having that shares. So it's eating your cake and having it, because it will not really make sense for you to, like, you're on 300%. You want to wait till 500, you have about maybe 3,000 profit, and you are saying no, that is too much of greed. And like it is often said on the market that bears make money, bulls make money, pigs get slaughtered. So once you get to 300%, you can just take like majority of the stock. It depends on how many units you have. Like you have, what I advise that if it is less than 5 units, don't bother using this strategy. Because stock is a game of volume. You need volume. So the more units as possible, the best. That's why if I want to get a stacked stock, I can avoid to put all my eggs in that basket, because I know that a spark will definitely increase. I need the volume. So one thing you should do is that if you want to milk a stock dry, use the 80-20% rule. Once it gets to like 100%, sell majority, so as you control your greed, but still stay. The remaining one you can add to it whenever it hits, add to it, and with that, you will milk it as much as possible.
Okay. Oh,
I will
just
get more than
I like this. Questions keep coming in deep, and I like the fact that we've got good representation. We hit the 100 participants, which is really good from people. It shows that people are thirsty for knowledge, and I think my Zoom can accept up to 2,000. That's fine. But someone actually asked a question as well. I'm just going to answer that question. And sorry, the question was, just bear with me, please. Alien. Somebody said 52-week high can be deceptive because Kodak had 52-week high. That may not be a value in the long term. What do you say to that, Alien?
In as much as you're checking the 52-week high of a stock, you still have to do background check on the company. You don't judge based on the 52-week high. 52-week high is like the top process. First, you check the services the company is rendering. Ask yourself, me as an investor, would I want to do business with this company on a normal day? Then before you go into looking at the 52-week high, the 52-week high is just telling you like the specific amount you stand at making at a period of time.
Yeah.
Concerning Kodak, after the first pump and dump that happened, we all know, okay, the pump and dump happened because of, they said they were going to give them loan for them to venture into the camera company. It has nothing to do with drugs. So that is pump and dump. So anyone who is doing research would have to check, okay, the reasons why Kodak had that 52-week high in the first place. After the pump and dump, there was a major.
So what does the pump and dump mean? Quickly, sorry, let's just,
Pump and dump is when news works for a particular company. A company that is not worth it actually gets to rally for reasons that cannot be explained.
Okay.
Just like Curry's 2,000% in one day.
Reasons that cannot be explained. These are stuff that we know. Normally,
so like it's not going 2,000% in one day, like Nathaniel said.
Even that Kodak. Okay, even that Kodak, like I advise someone on that Kodak because Kodak is a kind of tricky stock. Like
to buy or not to buy?
For me, not to buy.
Okay.
And this is the reason. This is the reason. Like what Ellen said, Kodak is like a photographic company per se, but it's more like they were quote unquote dead. So Donald Trump sort of resurrected that company by giving them loan, to produce vaccine. From photography to vaccine, there is no correlation. And we all know Donald Trump's like kind of person. Now, look at this thing. Kodak like went to the moon. That is like a pump and dump. It went to the moon. So later it started to drop because there was a kind of investigation to know whether the loan was okay. So now the government agency said, okay, the loan is clean. There's no shortcut. The stock went up again. Now this is why I said Kodak is not a good buy. Joe Biden is entering January 20. Joe and Trump are words and opposites. What is the likelihood, because Trump resurrected the company, what is the likelihood that Joe would not come and override what Trump has done?
The loan, right?
Yes, because definitely Joe can say, okay, because that's what Trump did with Obama. Trump kind of overturned many of Obama's deals and contracts. So Joe can also do the same that, okay, everything Trump has done, I'm going against it. The vaccine deal, I have my company that will do it. I'm not signing the deal. I'm not approving it. Another thing to note is that Congress would have to release that fund. And Congress is held by the Democrats. Joe is a Democrat. So that's another thing why I said Kodak is not a buy, because it's more like a gamble. You don't know where to go to. They just approve the deal. What if they cancel it?
So in a nutshell, be wary of stocks that do 500-600% in one day.
Exactly. That's a gamble.
Alien wants to give a clue. Come on then.
Alien.
Concerning Kodak, after the whole pump and dump, I actually had a conversation with someone concerning Kodak, and I was like, buy Kodak.
Wow, okay.
Was
that before the rally or after the rally?
After the rally.
Wow, okay. Wow,
deep. Because out of the penny stock. If you do the whole calculation, you see that Kodak was a penny stock before the whole rally happened due to the pandemic. So now the first rally was to bring Kodak out of the penny stock. Then they had a dip. So definitely the news was going to come out that, okay, this loan is actually clean and it would rally a bit. So that slight rally that happened after they announced it that the loan was clean, the person actually enjoyed from that rally. After that, you have to jump out because now you know this ship is about to sink. Like Nathaniel said, we don't know what Joe is going to do. Everybody wants their own legacies to be seen. Everybody wants their own authority to be heard, their own voice to be heard. Everybody wants to showcase their own power. So definitely Joe is going to come inside. He's going to find a company that favors him, favors the Democrats, favors his friends.
Yeah.
He's going to split up the whole loan. We could hear that, we're no longer giving the loan to Kodak and Kodak is going to drop bastardly.
It's not drop, it's going to dive.
Exactly.
It can lose 50% in one day.
It's just going to fall down on the knife edge. So it's best to avoid Kodak and just watch from afar.
So somebody said that's trading and not investing. Do we just agree that that's trading?
You
and
see,
not
end of
investing?
your calculation.
Okay. So
On
we
Kodak,
just,
Kodak is trading.
so you wouldn't advise anyone to buy Kodak and say, I want to keep for my children inheritance.
Exactly. Kodak is pure. That's you taking the risk. You're betting against the market.
Okay.
Everybody knows the market.
Right, let's move on. Short burst of questions now, just because of our time, and I know you've got things to do as well. But thanks for making it, first of all, and guys listening. I hope this has been working. Right, okay. Let's just keep it very short and simple. I'm going to ask Alien first, just because you joined us later. So somebody said, "What do you look for in a company? What are your how do you screen a company?"
When I'm about to screen a company, first, you need to know what the company is doing. Okay. You need to know about their financial record. To check their debt record. You need to look at something they do. You need to know why the company down. I don't go for companies that are already rallying. I search for companies that are down and sleeping, that I know in the next coming of weeks, months, they'll definitely rally for me to make my gain and the money I want from them and move on.
But wait, Alien, but you said you're an investor. I'm
an investor. See, I trust the companies. That's why I'm investing in them.
But you're looking for companies that are going down.
I'm looking for companies that are going down because definitely they would have a plan in order to come back up.
Oh,
I want to be part of the train when we're coming back up.
Did you hear that?
So guys? You check the price trends, you check patterns, you do moving average, support and resistance level, you do the whole technical and fundamental, you do everything as a vulture investor. Sometimes you check out for news that no other person on a normal day would even stress themselves to look at. Then before you come back to say, okay, let me look at the average volume, then let me look at the 52-week high. The 52-week high is just short. Remember the calculation I gave you now, the simple calculation, the whole current value.
Yes.
If it's 2 week high, I need to tell you, this is the certain amount I stand to make by the time the company decides to stand up and starts to rally. And definitely we know before it gets to that point, there must be several dips. Let's say, for example, you've made 100% on a stock and it dips down to like 80, you buy that dip. Automatically, that your 80% remaining would reduce because now you're buying new set of stocks and the value is higher than how you got the previous one. So now the whole gain you had at first will convert to capital.
Okay. Wow.
Now, when it converts to capital, the previous stock is making 2%. The new stock is making 2% because 2%. It just said that the previous stock would be making nothing less than 5 to 10% because it had been in the market in a very long time.
Longer.
So now you're getting two birds, catching more values within the space of within a short period of time.
Yeah. Okay. Interesting. Right. Quick question. Sorry. Let's just quickly hear Nathan's opinion on how you do your screening.
Okay. So.
And I was taking some notes, by the way, Alien. Well done.
So basically, I'll still come back to the first point I made about strategy. The strategy will determine the stock that you pick. Now, I saw some mention about SPAC mergers, and let me use that as a strategy for screening.
Yeah, kill two birds with one stone.
SPAC mergers, that is my current strategy right now. I hunt for SPACs. I hunt for them because I know that they can give me nothing less than 50%, 80%, 100%.
And they've never failed you.
Yes, none. So that's what I go for. And one thing to use to know a very good SPAC is the fundamentals, basically the fundamentals. Find out about the ownership or the management of that particular SPAC. The ownership, who is the person sponsoring that SPAC, who is the owner, what is, like, for example, now, this
Bill Ackman?
SPAC, GMHI, they were merging with Lumina.
Okay.
So now Lumina, I did my background check on Lumina. I found out that, okay, the person that is backing the management of Lumina is Peter Thiel, this guy that founded PayPal and everything. And I also, to find out a very good SPAC, find out the industry they are merging with. A SPAC that is merging with an EV stock would do well more than others because of the sentiments around EV. And that's why I'm so much looking out for SBE stock, the merger, because ChargePoint is going to be a crazy company. So you find out about, because that is the beauty of SPAC mergers, and that is why they are different from traditional IPOs. Because IPOs, you cannot take advantage of them until they become public, which is like what Airbnb did. Until when they became public, that's when, and it is at high. But for SPAC, that is a special purpose acquisition company. They are mostly trading at about $10, because that's where most SPAC starts from. So these companies are set up just to, it's more like a reverse merger, just to bring other companies public. So they merge with them. And so you find out, example now, the recent SPAC mergers, the one that happened yesterday and today. The one of yesterday, that is IPOB. They are merging with a real estate company, Opendoor. LCA is merging with a kind of a gambling stock, that is Golden Nugget. So you consider the industry that merging with. That will not give you an idea of how many percent to expect. Because the industries are different. So definitely you cannot expect the way an EV stock would rally. You cannot expect that same percentage from a real estate company. You cannot expect it.
Okay.
So that's not determine, okay, how many percent will you get. So about screening, you check about the leadership of the company they are merging with. You find out the CEO, who he is, like his track record. Then check out the investors backing up that company. So you may not necessarily do much of technicals for SPAC mergers, because SPAC there will be like 10%, they'll be at $10 until there's an announcement that, okay, this company is merging with this company, then to rally a bit, they'll come down, then towards the date of the merger, everything will rally. So you find out the company they are merging with. That is mostly important. It's not necessarily the SPAC per se, but the company they are merging with.
Right.
The company
well done. So I want summary answers now. There's so many questions, and I really want to answer.
Okay, no problem.
Does it not concern you that people are putting too much gambling into SPACs? For example, I've got data here. US SPACs capital raise. Let me just read this out. US SPACs capital raise 2013 is 1 billion, 14, 2 billion, 15, 4 billion, 7, 16, 3 billion, 11, 9, 13. To date is 80 billion, 2020. Is it a concern that people are putting too much money, i.e. gambling, in SPACs? What do you think? Quick answer.
So for SPAC, and the reason why it is high, SPACs are getting more attention this year more than ever before. More than ever before. Even this year, they've kind of tripled the number of SPACs that happen. So now it's not necessarily a case of people gambling in SPAC, but consider one thing. This year there was a pandemic, and there was a lot of uncertainty about the economy. And SPAC mergers is more like I said, is an alternative to the traditional IPO. And the traditional IPO is usually a lengthy process. It can take years and everything. But SPAC mergers IPO, it takes months. And because of the pandemic, so there were so many uncertainty with some private companies about going for the IPO process. So that's why many SPACs has been happening this year, because of the pandemic, not necessarily that people are gambling on SPAC.
So why do you think they get more attention this year? Quickly.
That I said is because of the pandemic.
Oh,
the pandemic
pandemic.
and uncertainty. So people are looking for more like a safer option and a shorter route. Because if they are to wait for the IPO, you know how traditional IPOs usually be.
Yes.
So the pandemic is just more like it's more like a loophole that came. I think if there was no pandemic, you will not get this craze about SPAC this year if there was no pandemic. So that was the reason.
Thank you for that, Nathan. Alien, quick question. Please tell me. Somebody asked, I'm going to wrap these questions into one, and I'm going to ask you as well, Nathan. But actually, while you're here, Nathan, just quickly answer me, and then we'll go to Alien. So, 2 questions. How do you determine which one to invest on trade on in terms of stock? And number 2, there's so many stocks out there. Is it not impossible to do, technical analysis on them all? So that's a question from someone. So I've kind of made 2 questions. With so many stocks out there, how many do you really realistically want to perform a technical analysis or fundamental analysis on? And number 2, how do you decide which one is are you trading or investing? Very short answer, and then we'll go to Alien.
Very, very, very short answer. There's a lot of noise in the market, so you need to focus on one thing. There are so many, so that's why I said at the beginning, your strategy. Know which sector you want to trade and you want to invest in. Is it that, okay, I want to go for EV stocks, I want to go for software or cyber security, I want to go for fintech, I want to go for maybe e-commerce or technology or biotech. So once you can, maybe if you decide that, okay, I want to go for a software company, you've already like restricted your knowledge. So you don't need to bother about EV stock. You don't need to bother about e-commerce. You are focusing on software. So now in that software, you can just go to a Google search, software software stocks. Then you can now see, then check the current share price, then look at the company, do your fundamentals, the financials, everything. Then you can now decide that, okay.
You're more of a fundamental guy, I could tell.
Yeah.
Well, this guy just wants to draw everything on the board and is going to tell me, yeah, I'm going to take my profit. So Alien, thanks for that, Nathan. How do you decide which one am I going to invest in? Am I going to trade on? Which am I going to invest in? And of course, there's a lot of them out there. It's realistically impossible. So tell me, what's your approach?
Number 1, first thing first, you need to know that it's better to have a bad stock than to have a bad company.
Oof. Well, okay, interesting.
That's it. Have a bad stock than have a bad company. A bad stock can always rally again, but a bad company can never pick up. Then if I'm to decide what stock I'm going to invest on, you have to work with the trend. You have to work with what's happening. You have to work with the current news. You have to work with you have to think ahead of time.
Yeah.
Okay, for example, when the pandemic came around, we all argued about, can oil be defeated? Can EV work? Can solar work? Can this one? The next thing we heard, global warming. Everybody was trying to adjust to reduce the emission of CO2 to the atmosphere. Then they had to switch to EVs. So those who caught EVs on time made gain.
Yeah.
Massive gains. So now you're working with the trend and the time that everything is going to pop up. You need to be in the mark. Like I tell people, it's better to be at the train station before the train takes off than to chase after a moving train.
Nice.
How do I find stocks to invest in? I spend weeks researching. I'm like, okay, now the pandemic is almost over. What will people fall back to? We're approaching winter. What services would people require? Sporting activities are coming up. What will people do? And so, like, okay, for example, I'll use Peabody as an example. BTU.
Yeah.
When I first mentioned BTU around November, October, I was like, okay, these stocks are too cold. Definitely there'll be winter. Some persons are still far way behind. They prefer their normal traditional cool method of generating heat. So they'll definitely buy.
Hmm.
And someone was like, why would they buy coal when they have thermostat and they have electric heater and the rest?
Hmm.
Then a few days back, someone brought my attention to same B2. Then I discovered, okay, it has already made 84% within
Wow.
1 month.
Wow.
Immediately we got to winter.
Hmm.
Okay, same thing for Hertz. I remember that day I mentioned Hertz. I was like, okay, Hertz is definitely going to rally.
I remember someone said Hertz.
Yeah, exactly. Someone was like Hertz. The next day, Hertz rallied like 50%. Those who cashed in got their 50% and moved out. Another thing happened with Yaktra. When I first mentioned Yaktra, everybody was like, why would you stress yourself on Yaktra like this, like
India.
that? Yaktra rallied the first 100, the second 100, the third 100.
Hmm.
Then now it's at 80 something, 90 something.
Well,
Depending
so,
on the time.
so you are on your third century now in Yatra. Wow.
Exactly. So
Wow.
now you need to understand the trend, that the tempo at which the world is moving at. You need to speculate. You need to be able to predict.
So understand the world and the way
exactly.
the world moves.
Most times you won't be 100% correct,
Of
but
course.
at least
I was just going to ask if you have any losses.
Definitely, there's no investor. See, as a vulture investor, there comes a time that you could get trapped in a trap. The next thing is left for you to maneuver it and try as much as possible to replace it with another stock, leaving that one there, knowing fully well to definitely bounce back. You buy the dip, but at the same time, you're recovering your loss from another company.
Interesting. Okay, right. Let's move on quickly. So I've got to ask. If I've got a lot of other questions. I'm not going to ask everything, but so I want a 2-second answer, yes or no. So somebody's saying, based on your quotes, bad stock is better than bad company. Where does Nicola fall in? I'm thinking of buying dips. Stay away, buy, or my strategy, or you have your strategy. Which is probably going to be too long to explain or lengthy to explain.
Before you invest on a company, you should have done your DD, and you should be sure that company is definitely going to make you proud.
Right. Okay.
There are several news holding Nicola down. Several news.
So right now, would you buy or would you not? No. Okay.
If I want to gamble, I would buy it, but I'm not in the mood to gamble.
Okay, Alien will buy, but Nathan, I saw Nathan shaking his head.
Well, I've not been a fan of Nicola right from the beginning.
Exactly.
So I was not surprised when the fraud allegation came in and the founder had to step down. So to me, the best time to have profited from Nicola was when they merged. That Nicola merged it was trading at $10. After the merger, Nicola rose to $70. That is 700%. Crazy. So although Nicola can still resurrect, but you would need the best form of patience ever.
Exactly.
That's patience. Because something can happen and one thing would happen, and whether there'll be a deal or there'll be a partnership and Nicola would boom. Because talking now, I think last month or so, they were about signing a deal with General Motors. The deal fell off. So Nicola has been having bad fundamentals. So if you want to buy Nicola, you will need the utmost form of patience because it may even take some years before Nicola will boost. So.
Okay, I've just got to make a quick comment. People keep thinking you guys are traders because you're speculating, but do you want to tell them how long you hold your stocks?
Okay, to me, it depends on the stock and it depends on, like one of my mentors usually say that money is a game, you need to play it. So at times, I can hold a stock for 4 months, 5 months, and I can decide that, okay, I'm enough. Let me rotate, put the money in another place. I held plug for 4 months. Plug stock, I held this for 4 months. I can hold stocks for 6 months or 1. And it depends on the amount of money you have in your portfolio. There are so many things to consider. So it's not just a one size fits all. If you have maybe $10,000 or $5,000, you can decide to hold some stocks for like maybe 2 years or 1 year. But if you have less than 500, you would need to grow your money as fast as possible. So you may not necessarily be focusing on the long-term stocks because you have little amount. So you need to boost up. So you can hold stocks for maybe 1 month, 2 months.
Quick question, Nathan.
Yeah.
How long would you think you would, if you love a stock, you don't have to tell me whatever stock you love. How long, okay, tell me a stock you love and how long you think you will hold it for?
The stock I loved before was Plug. I held it for 4 months and I dumped it. I went for another side chick, which was SPAC.
So you cannot hold any stock for years.
No, I can actually hold. Like now, like I said, my strategy has somehow changed around this period.
It's evolved, okay.
SPAC as much as possible. So once I'm done with the SPAC, then I go more of EV and software companies.
Now,
so
okay.
I can hold them for years, but with the strategy that I gave earlier on, the eat your cake and have it strategy, I profit and I still hold on to the stock. So that way I can even leave the stock for 5 years, 10 years. So I'm going long, but I'm still profiting from the. I can hold fast.
Let's make a fast move. And I believe, sorry, Alien, 5 seconds. I want 5 second answer now from both of you guys. Alien, can you hold any stock for long? Alien, can you hold any stock for long? And would you say, how long would you say, what's your favorite stock and how long would you hold it for?
See, I have several favorite stocks, but I'm going to mention one.
One is your, and don't say Yatra.
I was about to say Yatra.
So give us another one, your favorite stock, your number one stock. And you say, this stock, I want to keep it for my children, or there's no stock you think you ever hold forever.
You see Nokia.
Okay.
Nokia, the one cement is holding down. That same Nokia.
Yeah.
I'm going to hold Nokia for a very long time. Now, regarding the statement that someone said we're speculating like traders, what I tell people, vulture investing is when you speculate on a stock like a trader, then capitalize on it as an investor.
Did you hear that?
As a vulture investor,
speculating on a stock, capitalizing on a stock that's going down.
Yes, you speculate on a stock as a trader, then capitalize on it as an investor. You speculate on the stock when it's in a dormant stage, then capitalize on it from the period it starts to make gain, starts to rally.
Okay. So, carry on, sorry.
Okay, if you're getting a particular stock, you're supposed to have answers ready for questions like, why are you investing in a stock? Why are you buying this particular stock? What did you see in this stock? Like, for example, Yatra now.
I'm getting some noise from somewhere. Who's outside? Okay, better. Thank you. Okay.
So now, Yatra, for example, and Nokia. Why those two are my favorite stock? We know along the line, 5G is definitely going to come out to play. Nokia have been winning contracts, though they haven't rallied yet. But all it takes is for one news to pop up. Then Nokia could hit 145% in a day.
And then people will say, Alien, you started. They won't run. You've been giving them this warning.
And you meet it to 500.
Exactly.
Okay, let's move on.
I don't chase after a moving train. I wait at the bottom, enter the train.
And then you wait for it to move.
Every gradual process, we benefit from it. So when others are shouting, I made 30% gain, 40% gain. I could pop up and I'll be like, I made 100% gain. I made 200% gain. I wasn't trading. That was me investing. Because I saw the prospect of the company. I saw the future of the company. And I know, definitely this service is going to come into play.
Right, I've got other questions, guys, but thank you. Our participants should mute the microphones, guys, please. I want very short burst answers from both of you, of course, as comprehensive as it can be. So for the sake of people who have just joined us, and for the sake of people who have just a little bit. So for the sake of people who joined us, first of all, I've got Alien here, David, and I've got Nathaniel, Nathan, I call him. That's our favorite chef. So if he tells us to buy BKT, please do not buy. He's talking about his favorite food. So let's just move on. And actually, I'm going to ask two simple questions. Please keep your answers very short because I've got a lot of questions. for the sake of people who have very little to invest, what are you going to tell them? You know, we're dealing with Nigeria. Nigeria is not exactly a very wealthy country. We know what dollars is, etc. So how would you advise people to invest? People who just don't have a lot of money. Nathaniel, you start with the answer.
Okay,
So
for
let's
those
say
who
someone's only got $100. How can you encourage that person?
okay, for $100, I would advise you don't go for the Facebook or the popular stocks. My advice for now at this period is to go for SPAC mergers. That is like the fastest way to grow your money at this moment, because you need to flow with the market. So what the market is giving you, you take it. At this moment, SPAC are like the in thing. So if you, for those with $100 or less, just go for SPAC mergers. You can have as high as 50%, depending on the stock. You can have as 50, you can have 100% or even over 200%. So go for SPAC
That way you
mergers.
start gradually building your portfolio.
And once you've now grown to a certain amount, then you can now do your proper investing, maybe going for software company and others. So that's
And do you think it's possible to grow from $50 to $1,000?
Well, it depends. You cannot actually go from $50 to $1,000. I don't think it's possible, even if you do measures, except if you are adding to the stock, except if you are adding. But if you are just plain $50, you are no more adding any money. It will take years and years. No matter the
it's just going to take a while. Okay.
Yes, it's just going to take a while.
Right, Alien, quickly. So if I've got $100 in my whole worth, how can I grow my accounts?
Brother Skipper, I don't work with amount. In the rule of money, you work with percentage. That's one. Number two, you have $100. The question is, do you want to invest or you just want to do a Ponzi scheme? No, because most persons will be like, I have $100. How can I turn it to $3,000 within the space of 2 months? That's the question most Nigerians ask. Everybody's after Ponzi scheme. Drop small, get big really quick. How is your patience gauge? Can you wait?
Yeah. So
there's nothing too small to invest with. Definitely make your gain. Everything has to do with percentage.
Absolutely.
Though 10% of 10,000 naira and 10% of 100,000 naira are not mates, but it's still the same 10%.
Right, okay, wow. Alien is quite deep, actually.
In the rule of money, you don't work with the amount, you work with percentage.
Did you hear that? So Alien is actually telling us to work with percentages when it comes to, yeah, okay. So gradually, when you have $50 or $100 to start with, gets a good percentage, and then of course, work your way up like that. Okay, let's just move away from here. Okay, someone also asks me, you know, what literally brought most of us here is this pandemic, and we're not really talking about health. I want a very short answer, if you can. So where's the question? I think I wrote it down. Okay, so what do you think about Novavax, Moderna? How do you trade? Do you trade on investing them, short or long term? Short answer, Nathan.
For health stocks, short term, I profit from vaccine news and I sell. That's all.
Wow, straight to the point, Nathan. Are you like a military man? Okay, what do you say, Alien? Moderna, Novavax, for example?
Long term, short term. One, this is my reason. Vaccines, short term. Cancer is always going to be here. HIV is always going to be here. Other sickness and ailments are always going to be here. So definitely the health sector is going to be around for a very, very long time. It's never going to leave the market. Every health sector will advance. If God forbid, but if another virus breaks out, everybody will dump the whole COVID-19 vaccine and switch to the new vaccine. So which means health sector is going to be important. You still get to work with them long term. If the company is treating, even though the company is not treating cancer now, by the time they are done with vaccines, you would hear stuff like we're switching to drugs that will aid people that have cancer, or we're switching to drugs that will aid people that have so illness or sickness. So health sector goes both ways.
Okay, I like that. I like that answer actually. So in Nathan's in Nathan's situation, he looks at the now of this health sector. You do it now, move because of the vaccine. Everyone's focused on vaccine right now. But with Alien's actually the investor in this case. He's looking forward. He's thinking, there will be other ailments to consider, and it's always forward looking. Okay, let me just go to other question. How do I arrange my portfolio, Nathaniel? How do I arrange my portfolio?
First of all, I'll not talk about SPAC mergers now. So how to arrange your
This guy loves
how to arrange your portfolio, you consider where the world is moving towards.
Okay.
Because that is where the attention will be. What are world leaders focusing on? Because it's what world leaders decide. That's where the market will go. So I've made some personal individual research, and I found out that there are like 5 major sectors that would drive the market this coming decade. One is the EV sector. The second one is security, data analysts, that then tech, no matter what, until the world dies, tech will still be there.
Oh, you believe in tech?
Yeah, tech will still be there. But although it depends on the tech, and by tech, I don't mean the Facebook and I don't mean those ones, but anything that has to do with technology.
Technology as a fundamental, yes, as a platform. Absolutely.
Yes, technology. Then also health, like what Alien said, after the pandemic and everything, there will still be health issue one way or the other. So one way to arrange your portfolio is, first of all, it depends on the amount you have. Because me personally, I don't believe in one size fits all. Because what would work for, if I have $10,000, the way I would arrange my portfolio, it will be different from someone that has $100.
Yes,
difference.
Yeah.
So if you have less than $500, for example, think of how to grow the money to $1,000. And one of the easiest and fastest ways to grow it is through the SPAC mergers. Then once you have $1,000 and above, then you can now start spreading out your portfolios. You can
so if I
have some stocks in each softwares, then else.
So if I have about 100,000 right now, I'm gonna have to look at the 5 core or key sectors, and you think spread my money that way.
If you have $100,000, if you have 100,000, then you can consider a more wide spectrum, in the sense that you can now focus more on dividend stocks. Because with $100,000, you are not necessarily looking for money per se. Although, yes, yes, you are still looking for money though, but like your focus is kind of your focus will not be the same as someone that has 10,000. So for $100,000, you can now maybe split it into 2. Use 50,000 for your dividend stocks, so as we get your dividend. Then the remaining 50,000, you can use it for the capital appreciation, because you cannot have too much money. You cannot have too much money. So with 100,000, 50 for dividends, then the other 50 to be growing and multiply for your
Okay.
So that is
Alien, someone just asked me, some of those stocks that are yet to move, do you want to give 1 or 2 of them? I think it's probably said Nokia, but you guys are not listening.
Okay. You know, at some point in time, hologram is definitely going to come into play.
Yeah.
We all know at some point in time, traveling would resume back fully. Definitely. That's one sector that will never ever crumble, because everybody is going to keep on moving from one destination to another.
Sure.
So, pandemic or no pandemic, lockdown or no lockdown, who will travel? Who travel?
People will stay in hotel.
Exactly. People still stay in hotel. People still go on cruise ship after the whole drama. People will still rent cars.
Yeah. People will still buy houses.
So in a nutshell, Alien is saying people should start positioning themselves.
Yeah, you position yourself ahead of time.
Alien is not in the ship, ready to take off. So Alien is saying position yourself right now, because while the world starts opening up again, you don't want to be
The speed will be too fast for most people to catch up with. For example, but by the time traveling starts, I remember doing a calculation concerning the whole speculation about India travel market, how much you're supposed to make in a particular year, and how much each company is supposed to donate. That's Airbnb, Cleartrip, and Yatra. By the time traveling resumes fully, the speed at which these companies would use in rallying would be too fast. Health sector again, definitely.
Wow.
People are going to keep on going to the hospital. People are going to keep on buying drugs. And again, Africans, not just Africans, everybody in the world likes to faji. We all like to have a good time. We all like to have fun. So there are still sets of people that will go on cruise ship. After that, we still have what sector? Okay, for example, WIMI. WIMI is going to pop up. If somebody does not buy the company, we'll end up saying something that will make them rally really, really fast. 5G. Wow. Sony Ericsson, Nokia. But why I chose Nokia over Ericsson is the fact that the 52-week high of Nokia is still quite far from the current value. So when the whole rally starts, for you to get to 52-week high, you've made your gain before you even start to prepare for the main gain. Then concerning the person that said they have little money and how do they spread their portfolio, one thing they should know is that no amount of money is ever enough. Even though they have 10,000, they'll say it's not enough. Even though they have 1 million, they'll say it's not enough because you wouldn't get it the way you want to get it. Sure. So, okay. They should die.
Thank you. So I like what you said, both of you actually. So I think you both agree with yourself and start forward looking at the future. So you're not caught off guard, really. And let's just so we're clear, guys, whatever we say here doesn't constitute does not constitute financial advice. You still have to go perform your due diligence. Okay, this is just for education purpose, and we're all learning. Okay, I've got other questions here. Okay, quick question, and this is going to be a very short answer. Someone said local stocks. When we say local stocks, talking about Nigerian stocks, what do you want to be?
Run away.
Why? Short answer. Why?
$1 is equal to 500 naira. So $1 gain in the US stock market, you're having $500 and 500 naira. So Nigeria market is for politicians. Let me just put it that way. Run away. Any dollars, you're already making money in naira. So any dollars, why do you want to put your market in naira? Nigeria's market is crazy, man.
Right. Okay. So I guess you think it's heavily manipulated. That makes sense. Alien, somebody said, can you make 500% in Nigerian stock market? Should they invest?
Tell the person to jackpot.
So guys, okay. So Nigerian stocks is not to be then. Somebody said due diligence. I believe we've covered that actually. You've talked a lot on that. Let me just look at other questions we have. Somebody's asking, how do you build long-term wealth in the stock market? Patience. Yeah.
Get rid of fear.
Yeah, go on. I can hear that. Carry on.
Keep greed one side.
I didn't get the question.
So we're asking, how do you build long-term wealth on the markets? Okay. And Alien just said patience. And, don't be greedy, right?
Yeah.
It's just funny how Alien separates 500% and do not be greedy. How do you maintain that balance? But I like that response. Alien is just somebody you would probably not fully understand. Okay, and what's your take, Nathan?
To grow your wealth long term, 3 things. And if you miss these 3, you've missed everything. 1, manage your fears. 2, control your greed. And 3, have a lot of patience. I can't overemphasize these 3. If you don't have it, you are not playing the game well. Simple.
Wow, you can prepare for this. Thank you, Nathan. Okay, I've got another question here. So, acquiring one of the most underrated skill in trading is patience. So how do you control your patience? How? So you could see, so if I'm, by the way, guys, Nathan's got students who you mentor, I believe.
Yeah.
So let's just say I'm one of your students, and I see a stock going, Kodak, and you tell me not to invest. How do I control that? How do you control that?
Is it with Kodak?
Let's just say, no, just a random stock. I
Okay.
see a random stock,
Okay.
it's rallying 700-800%, and you're telling me don't do it. Why? How do you control that patience?
Okay, if a stock is already rallying before you get in, there are so many things to consider. What industry is that stock in? And most importantly, check the stats of that company. I think Elian mentioned this earlier on, and I would say it again. If a company is nearing its 52-week high, and that's when you want to buy, hold on, don't buy, because you are most likely buying at the peak, and it's going to dip. Every stock dips at a point. So once it is nearing, so the best way to deal with FOMO, that is the fear of missing out, any stock that is nearing the 52 weeks high, just leave that stock for now. Don't go near it. And also any stock that is nearing the 52-week low, we also have to watch out. Because what's the assurance that that stock is not going to crash? So you look at both extreme. And Ellen said this earlier on about, I think Nokia also, that the best way to enter a stock is when it's somewhere like in the middle. It has not yet reached its 52-week high and it's not low. So that is the way to like play it safe. Because example now, Xpeng was trading at $72. Some people would feel, okay, the EV craze, Xpeng will soon get to 100. Let me buy. And they bought at 72. Now it has crashed to 42. So once it is nearing the all-time high, just avoid that stock for now. Wait for it to dip because it will surely dip. The momentum will go down at the point. That's when to buy.
Good answer. Okay, I've got a similar question. I think I've asked you before. You and Nathan, by the way, please. I like your take. Let me just, someone asked me a question about options. We need to learn puts and calls and what they're about and how we can get into them. This question is for me. Unfortunately, we haven't really got options in Nigeria, but let's talk about that, Nosa, later, please. Yes. Let's just keep this focused. Okay, so this question is, so if you have $100, would you advise that person to invest or trade? Nathan?
For $100, you trade.
You think it's best to trade instead of investing?
Yes, although it now depends on the kind of trading you want to do. You can either trade with e-commerce stocks, whereby you profit from their quarterly earnings, or you trade with the SPAC mergers, you grow your money. Because if you are going to play long term, you can't expect a stock like maybe BlackBerry now. Like that, you want to go long term. It's more like a gradual growth. You can get maybe 20% in a month or 2 months, depending on the stock though. So that is more like gradual. It's kind of delaying the growth. Yes, I know that we need to control greed and we don't need to expect to double money fast, but
oh, the line's frozen. Alien.
Yeah.
Just before he gets back, there's a random question I've got here. How do you manage money? How do you become disciplined with money? That's a question someone's asking me. How do you become disciplined with money?
When you realize money is hard to come by, automatically.
That's tough, isn't it, though?
It's easy for you to squander $10,000 within 3 hours, and it's extremely difficult for you to make $100 within some minutes. So with you having that in your mind, I have to respect myself and plan my strategy well. For example, if a stock is down by 10%, it pains you more than a stock that you earn 50% gain. You'll be more concentrated on the stock that is down by 10% because you're losing money. Money is hard to come by.
So you need to understand that money is hard to come by.
Exactly.
Okay. Oh, Nathan is back. Okay, right. We'll keep this. I want to ask just 3-4 more questions, and then we'll cut it out so that you can get onto your, your daily lives. But thanks a lot, Nathan. Thanks so far. Right. Very short answer. Someone says, which sparks are you investing in, or considering it investing right now?
I go for any available spark, but I look at my fundamentals to find out which one is good, because it's not all sparks that are good. That's another thing to consider. It's not all.
Okay. Oh, why does the line keep failing you? Is Alien investing in sparks at all?
Nope.
That was a short answer. Okay. Someone's asking me, what's the best way how do you deal with FOMO, Alien? Okay, I'm going to wrap this question because I wanted 20-second answer. Number one, what's the best way to deal with FOMO? Number two, what's the quickest way to get off carrying a heavy bag? Are you going to sell with loss, hold on, or die slowly, hoping to leave again?
I'll answer the heavy bag first.
Yeah, quickly. So, Nathan, the question I'm asking, well, let's just Alien should answer first. So, it's number one, how do you deal with FOMO? And number two, when you got bags, in the bags, just a stock terminology, which means you're losing. So, how do you deal with bags? Do you sell at a loss, or do you just die slowly, hoping that this stock is going to come back up? So, let's get Alien's response, and then we'll get yours.
You haven't made a loss until you sell a stock.
Wisdom.
Same way you haven't made gain until you sell that stock.
Wow, even if it's going at 90%, you haven't made that gain.
You haven't made gain.
Until you sell it. I love that.
Until you sell.
Okay.
In the first place, for you to buy that company means you trusted that company. It means you saw something about that company. It means, okay, there's something particular about that company. That's why you bought that stock. For example, I remember when I got Hertz at first. That was early this year. I got Hertz like today, then tomorrow Hertz is dropping like 20 to 30%. Then I bought the dip. Only for the following day, after the Zoom webinar that Bamboo had, I saw Hertz rallying like 154%.
Don't tell me you left the webinar to go and sell.
I had to follow up. Like fish trap. Money is hard to come by. Like that.
So you left the webinar to go and...
I have to go check out my stocks and be sure that what I'm seeing concerning Hertz is true.
Okay.
When I got it, I said, okay, fine, I'm already making my gain. That means what I saw about the company actually came into play. I made my gain. So before you buy a company, you have to be sure that this company is a good. That's why I said it's better to have a bad stock than to have a bad company.
Company, right? Okay.
And if a stock does not favor, it doesn't mean it would not favor another person. That's one thing most investors need to get in their head. Because I'm saying a stock is bad for me, does not mean that stock is going to be bad for them.
Of course. Okay.
So once they understand that, then concerning the part about FOMO.
Yeah, so how do you deal with FOMO?
If you lose your money, would it pain you? That's the question I ask people when they're about to chase over a stock. If you lose your money, would it pain you? Anything that goes up must definitely come down, according to law of gravity and according to law of money. After trading Forex for some time, trading crypto for some time, before entering the stock market, these are the things I got to learn the hard way. Before, if you see something rally, it must definitely come down and rest before it rallies again.
Right, okay.
If you're chasing after a moving train and you're at the back, if you lose concentration and the train stops all of a sudden, let me use a car for example. If a car is speeding and you're running towards it with full concentration and next just lose concentration for some time, the car has a sudden
brake failure,
stop, you definitely hit it. So that's your money. Like I tell people, never invest in stocks that are filing for IPO fresh if you're not a fast trader who has experience. Avoid stocks filing for IPO. Though you see some mysterious rally on the first day, but give it 3 to 5 days, they'll definitely come back.
Come back. Did you hear that, guys? Never invest in IPOs. Okay, Nathan. So quickly, so how do you deal with FOMO? And if you're making a loss, would you rather say wait till it comes back, or would you say, do you know what, cut your loss and go? What do you tell your students?
So two ways concerning about losing. 2 ways is find out about the stock and the direction of that stock. Let me give a practical example of what happened when Tesla. What happened to me actually when Tesla had
Marvelous.
Come on, guys. Yeah, carry on. Marvelous.
So when Tesla did their 5-for-1 split in August, I bought into Tesla. That it was trading at about $400 and something. I bought Tesla. So getting to September, Tesla was now going down. It went down to like 300 and something. At that point, I sold because of fear. Now, like what Alien said, and I've even talked about it before. Like what Alien said, you cannot lose money until you sell a stock. Even if a stock is going down to 20%, you've not yet lost until you sell that
it.
stock.
So it's just going to tie down your money for a while.
Yes. So although it depends on the stock too, there are some stocks that you just have to cut your losses. Now, this one, I cannot teach you on that. That's an individual thing. There are some things that nobody can teach you. There are some times that you just feel that, okay, let me cut my loss. This money will serve me better elsewhere. Sure. So when I sold Tesla at 390 something, when it was $397, I sold. Had it been I knew, I would have still left that Tesla because knowing that Tesla would rise. Imagine I sold at 300. Now Tesla is over 600.
Wow, you could have made 100%.
So you can see now. So you cannot lose money except you say. So dealing with bags, there are some stuff. Just find out. It depends on the industry. There are so many fundamentals you need to do. The industry and the particular stock. Like now, EV stocks, even if they are down, you can still keep it. It will still rally. So it's just a matter of when, not if. So you have to do the fundamentals, which kind of company. Because there are some companies that as they are going down, just have to sell to cut your losses. It may take a long time before it bounces back. Now, talking about FOMO, like I said earlier on, when a stock is nearing its 52-week high, just avoid that stock. But there are some stocks that FOMO doesn't necessarily apply to. Now, let me explain. There are some stocks that are like, it's like a moving train. So, train has different bus stops. So definitely those that entered at the main station, they already have they're already seated. So you that joined halfway, you may not get the best seat. You may just stand inside the bus. But if you decide that I want to wait for seating, that bus will be, and it may take, like you've already lost that chance. So there are some stocks that just enter from any bus stop, then you have to go long because as you enter from this bus stop, it will definitely dip at the point. Then you just have to be patient and allow it to go back up.
That's interesting. Thank you very much. Someone's actually saying as well, I don't know, maybe I probably should just quickly answer this question, saying, oh, do we have the fear? Actually, let me ask you quickly, and if Alien objects, feel free to talk. Do you have the fear that if Bamboo shuts down, what's going to happen to your money? Your money just disappears into thin air. As Bamboo is just a platform that you use. Do you have that fear?
No.
What if they shut down?
There's a like a backup or insurance of about $250,000.
500 actually.
Oh.
Yeah?
500 actually.
That's Nathan's portfolio. Alien's portfolio is $500,000, so he's very sure. Okay, that's fine. So guys, Nathan and Alien, even I know that as well. There's a backup which is backed by your platforms. If you're going to invest at all, make sure you invest in a platform that's backed by the Security Exchange Commission. They call it a SEC. It's usually minimum of $250,000, but Bamboo's got, which most people here have, They've got the Nigerian SEC and they've got the US SEC, Security Exchange Commission, which is $250,000 each. So you guys, your money is safe. And that's fine. So you don't be afraid. If Bamboo shuts down, your money is still safe. There's a back end supported by the government. And I mean, who's more powerful than government? Nobody. Okay. Someone else is also asking me, what's the difference between, but this is quite, I just want to quickly answer this one. Carrying a bag and having a multi-bagger. Of course, multi-bagger is just when you have 100%. That's just, you have a bagger, you have a multi-bagger, like Alien, 2, 3, 4, 500%. That's a multi-bagger. And carrying a bag is just when you have a loss. But let me go to the question now. What percentage do you cut your loss, do you think, Alien? Or Nathan, if you cut loss at all, or you just never cut any loss in your case?
I've actually cut some losses, like I did with Solo, I did with YJD.com.
I was going to say, if you say Yatra, Alien will be
No,
mad.
no. So this JD.com, this Chinese
e-commerce.
So I cut my losses on both, but I didn't do that because I was losing. I felt that, okay, I have an opportunity elsewhere that I don't want to let go of, and I'm already losing, so let me just cut the loss and put it in this stock. It will rally, and I would more like you lose some, you win some. So it depends on the stock to determine which. There are some stocks that even if you have a loss of 20%, 30%, you can still hold on to it. It depends. While there are some stock that once it's 10%, you can. But any stock that is getting more than 50%,
time to bounce. Okay.
Except if you want to wait for a long time for it to recover.
But Alien, what's your strategy on loss? Do you cut your loss at all?
I don't.
Alien. So how do you make losses then if you never cut losses?
What I do, once I see my particular stock is down, I try as much as possible to top up. Buy something that will replace that percentage that is down. For example, there was a time I was down by 20% on Triumph Group, TGI. When everything was still fresh, TGI was down 20%. Then it got to 30%, 40%.
The losses.
I bought it. Exactly, losses. I tried as much as possible to deposit, buy, in order to recover, to cover the losses that it's showing. Now my portfolio is still down. I know fully where I'm down by 50%, like a certain amount. After buying that amount on TGI.
Okay.
After buying, when TGI started to rally back, I recovered my 50%. That's from the old stock that was down by 50%. Now the new stock gave me extra 50%.
Oh, wow.
Now, immediately I'm recovering 50%. I'm making extra 50%. Then now both stocks joining together to rally another 100%. I'm making 150% when another person will be making like 50% or making 100%.
So, but I'm just thinking though, because I mean I agree with both sides, school of thoughts. But what do you think about the opportunity cost that your money is tied down somewhere and that money could have been doing something good somewhere else and you could make that money faster? You get what I mean?
The only time I can advise someone to cut their loss on a particular stock is when they buy from top dog.
Like, what do you mean top
like
dog?
Apple, Amazon. We all know these are big boys. They don't have time to.
Is Samuel here? Our Apple man.
Exactly. They don't have time to say, I have to prove a point to this guy. I can bring back your money. Those guys have no chill. They have no time to prove anything for you.
Yeah.
So when it's a company like, I would advise you cut your losses. Take the amount of money you have, just to another place. Apple is a good stock if you have the mind to wait for like 4 years, 5 years, 7 years, like that. Because Apple is not so far from the 52-week high. The 52-week high is not over fast. Same thing as Amazon. Same thing as
Apple has not done to a dividend stock already.
Exactly, it's a dividend stock. Except you know you're going to acquire really large, then you'd wait. Let it just be paying you dividend like that. Aside that
and
one,
the dividend is very tiny.
Exactly,
it's a kind of useless stock. Seriously,
Apple is a good company, but for me, the stock It's not for me. The only time I buy Apple is when I know, okay, I have this money. I don't know what I'm using it for. Let me just keep it somewhere.
So
That's when I can buy
Nathan,
Apple.
so
Yeah.
Alien sees Apple as a savings account. Nathan,
Exactly.
what do you see Apple as?
I go with Alien. Apple is if you don't, maybe it's more like a pension stock.
Oh my
Apple is more
God.
like a pension stock. You are not planning on growing that money, maybe exactly like a savings account. You just want to, because Apple this year, I think around August or so, they hit a market capitalization of $2 trillion. What else is left? So it's more like it's more like they've reached their peak. So there's little or no growth left. So they just increase their dividend rates, and it's just more of a dividend stock. So it's just like savings account. Let me just hold this stock. Then when I need the money, I sell and use it for something else. So
Brother Skipper,
Yes, sir.
most of the persons, they are saying Apple. Like to talk about the people that would appreciate Apple stock very well, we would
Mhm.
have to try to people that bought Apple stock in 19 that long. When Apple stock was like Yaktra.
oh God.
When Apple
He
was
said
like
19.
no, like that. We all know Apple went bankrupt before they came back. So
Hmm.
the people that vultured invested on Apple are the ones enjoying it now. Same thing
Wow.
for Amazon. People that started early with them are the ones praising Amazon now.
Hmm. So
Those are the
somebody,
real players that will say doing really well.
somebody said, I have Apple. Sorry, I have money, but I don't know what to buy. So I'm just going to put my money in Apple. So I'm guessing both of you agree with this. Just to hold
Since
the
you're
money.
saving me for the meantime,
And
no wahala.
okay.
But you shouldn't go and get it when Apple is high, because even 2% loss is going to affect him very well.
Yeah.
Okay, so I've got. Okay, this question is for Alien actually, and let's just keep it short and simple. I want us to go in about 5 minutes. You guys have been amazing, I've got to say, and it's been almost 2 hours here. Someone say, what's your best indicator for screening or for technical analysis if you do that, Alien?
For technical,
Or you're just very manual with your way? I know you've given us a calculation before.
yeah, I've given the calculation, but at the same time, I still try fundamentals. I still try technicals. You need to look at the chart, you need to look at the pattern, you need to look at every information that stock.
Interesting. Nathan's line is failing. Right, Nathan.
You need to
Okay,
use
sorry.
technical indicator.
Okay, what's your favorite one? Do you have a favorite
Use
one?
your
or-
technical indicator.
Do you have a favorite one? Someone is saying MACD, RSI, all those kind of things. Do you have a favorite one you use, or you just literally just do you combine all sorts? Alien's line is failed. I think it's a combination from the way Alien said, and Alien's actually very more manual oriented. He tends to do a bit of calculation extra as well. But Nathan as well. Do you kind of use some of these things at all?
I don't use technicals.
You're very Warren Buffett style.
Yeah, just fundamentals.
He's very Warren Buffetty, Nathan. Okay, that's good. Quadruple witching. Someone is asking me, how's it going to affect? Do we really need to do this? Witching, how do you go today? The only thing, okay, let me just quickly go through. It affects volatility, and it's mostly when all these different options and indexes, they all come, so they reach a deadline at the same day. But I'm not going to go way into that. But it does affect volatility. One more thing I've got to say is, guys, this week is the last full trading week of the year. So you've got to prepare for next week. Next week, there might be low liquidity because people might pull out the money from the markets. That's something I want to give you away today. People might pull out the money for the markets until the new year, even though the markets only close for 1 day over the Christmas, which is just 1 day in Christmas. But there's only 4 more trading days. Traders don't see it that way. They see 4 more trading days for the end of the year. There will be less volatility, or there could be. No, it might not happen. Okay, so be careful with your money there. If you want to take your profit now, if you're waiting for it to go to 800, 900 like Alien, start looking at what I said. It might not happen, but I'm just telling you based on experience. Okay. So we're just gonna move off this. Final question. Final question. Nathan, what have you got to say to people who are not investing, and any parting words?
Alien is in Jupiter. These guys are in Mercury.
So if you're not investing, you are in Mercury.
Yes.
Okay. Good call. And sorry, do you want to talk a little bit about your? I know you got a few students as well. Your offering. So talk about it. It doesn't matter. You know.
Sorry.
I said talk about your offering as well. I know you've got students who you mentor.
Okay. So
talk about it.
Yeah, basically it's just is a like a WhatsApp group where me and my friend, we currently have about 39 students or 40, yeah, between 39 and 40. So it's just more like an accountability group. So
okay.
It goes beyond recommending stocks, because yeah, I believe that beyond recommending, you should know why you are choosing that stock and have knowledge, because how you can pass on this knowledge to others, to your siblings or to your family or your children. So you need to have the knowledge. So it's more like an accountability one-on-one session, so whereby we guide you and ensure that you are taking advantage of the money, because the whole essence is to grow your money. So you can't just be thinking of other, maybe you are deviating from the plan that would actually help grow your money. I'm in the meeting at the moment. Hold it by the hand and ensure that you are doing the right thing.
Okay, and someone is asking, is the WhatsApp link free? If it's not free, if it's free, can you drop it? But if it's not free, these guys are gonna vulture on you right now.
Okay, it's not actually free. It's not actually free. So if you want to join the WhatsApp group, you can just contact me. I'll send my.
And how can we contact you as well? Yes, please.
Yeah, I'll send my WhatsApp number to the chat room, so you can just send me a message.
Okay, and I've got someone here who said the accountability is a group, it's free. Someone's been there, and that's Nathan's number. If you want to contact him, that's fine. Please don't spam him. Okay, and Alien as well. Please talk about your offering, please. And how can we find you? We haven't got the money to go to. We haven't got the fund for SpaceX.
Well, I have persons I train. I do not know the total number of my students because I cannot mention them much.
Wow.
But one thing I do not have a WhatsApp group. Neither do I have a Telegram group. All I need one-on-one section.
Oh, okay, that's interesting.
You want to learn, you come. It's a one-on-one section. Discuss about it. We get to talk about it. I take you at your own pace, so you know how to learn the way that is best. You get to ask questions. I get to answer you speedily whenever it's possible. We get to interact. And now the funny thing about this is about me passing knowledge to another person. So what I do, yes, it comes with a fee, but just a one-time payment.
Yep.
A one-time payment, then.
It's a one-off payment. Okay. And how can people who are interested, how can they contact you as well? So we've got Nathan's number there. And if anyone's interested in joining Alien's group as well, how can they contact you as well, please, Alien? Because I know Alien doesn't have Instagram. So how can we contact you, Alien?
My Instagram is just for everybody, same as my Twitter. I do not talk about business. I'm that investor you wouldn't know is investing. That's how I am.
So they can contact you where?
Telegram, just search for Alien X, you see me, or you can send me a message on WhatsApp. I'll drop my WhatsApp number now.
Please do. Please do. Okay. So fantastic experience for me. Sorry, someone's asking me, why am I really mostly talking about fundamentals today? I mean, the focus is mainly on, Nigerians who are investing. And we've talked about both of them, but it's a bit difficult to touch everything we are doing. I think we're going to have some more moments like this. The first time I tried talking to Nathan, your network failed. So today it's fantastic.
Why Nigeria? So
I know. Maybe I should drop the bombshell. We're probably going to see Nigeria at some point this year. That's
Ah,
so that'll be interesting, and hopefully. But yeah, I've got to say, guys, it's very important you have an accountability partner, like Nathan said. Absolutely, I think. Don't sometimes people think about that money, but the money is nothing compared to what you get out of it. You become a better person, and in Alien's case as well, it's very, very important. Just you need to have a group, because if you have a group of 5, and if they're all broke, I'm sorry, you're the 6th broke one. You're just lying to yourself.
Very
And I
true.
see people talk about it's a law of average. The more you do it, the better you get. I told someone 5 years ago, things were really bad for me in the UK. I just did my research, PhD, etc. I'm thinking, I got a PhD in maths, The world's gonna fall for me. But things were really hard. And I spoke to a friend of mine. I said, in 3 years, I want to hit $100,000. And he said, really? And I said, let's start together. He thought it was a joke. He didn't start with me. So we went that close. So I moved to other friends who were with me. And, I'm going to say I hit my target. I don't know if he hit his target, but I can tell you he did not. So that's the thing. And it's not just about money. It's all about what you become in that process. I told someone about I wanted to make $1 million at some point in my life. Someone said, really? I said, no, it's not about making $1 million. It's about the process. It's what you become in that process. You become more disciplined. You see life differently. And that's just the thing about me. So anyway, parting words, guys. It's been an amazing experience for me personally. Nathan, thank you very much. Alien, David, thank you very much. Everyone who's been here as well, I really do appreciate your time. You give me your time, and I hope we haven't wasted it. So thanks so much, guys, for joining us. This has been recorded as well. We're going to put it on YouTube today as soon as we can. And hopefully we're going to get this done again, aren't we? Maybe it's going to be a roundtable discussion live. Who knows? But yeah, guys, and of course, I've got my course as well. So you could either speak to me about my course on, I've got my mentoring club as well. Feel free to ask me about joining. It's all, the sky's big enough. You don't have to be on my course. You could be on Nathan's. You could be on Aliens. The sky's big enough for us to eat. And guys, always share things. Don't hide it to yourself. Sometimes people think they know a stuff, they don't want to keep it. Guys, if you're keeping it to yourself, people will not buy it and it will not rally. But the sky is big enough for all of us to eat, and let's us all eat together. Okay. Someone said I didn't really give my opinion on all these things. The stage is not really for me, guys, but I mean, I'm an investor, I'm a trader. You all see me. When I make my trade, I do a screenshot. I like accountability. I like to be as transparent as I can, and I just put it out there. So I think the next one, the table's my turn. Nathan, you do the interview, okay? I don't mind the table turning.
okay, no problem.
Or Alien, it doesn't matter. It's just a chat. It's not really an interview. But guys, thanks so much. This is a new thing for Nigerians, and we just hope everyone will get to doing this the more, okay? And waiting patiently for the next round. Yes, we shall have another round, but thank you guys so much. And honestly, you two guys, I owe you something. I don't know what it is, but thank you for giving me your time, okay? And I appreciate this, guys. Thank you. And thanks everyone for listening. Bye-bye. Bye, guys. Right, so we can now unmute yourselves because I'll give you 5 more minutes. I know people want to do a chit chat. This is going to go on YouTube, and then we could just, if you're not hanging up, you want to have a chat. So what's your question? What are your questions? So feel free to ask me your questions. You can, right, so feel free to ask me your questions. What are your questions? I've only got 5 minutes. I've got a meeting now, 6 o'clock. Oopsie. Your network failed you. Tesla in February, okay. February, okay. Tesla in.
Brother Skipper, issue.
Shalom. How now? You need to learn patience. Did you see what Naked did today?
Yeah.
Patience, as they've been telling us. So, any question for me, guys? Any question? Oh, thanks, James. Thanks, Issa. Thanks, Victor. So these guys some of these guys are very new.
Brother Skipper, well
Yes,
done.
How now? Mr. Bimbola, this guy,
Skipper,
you just want to trade, chai.
Brother Skipper,
We supposed to get plenty
Brother
now,
skipper.
but anyway, as in,
We will.
but then
we will.
we
will.
As in, majorly we talk about due diligence. I believe technical analysis is very, very important, really, really important. Then that would drive a lot of things, even for irrespective of any time you're moving. I see, okay, probably I day trade at times, and when I do, I check when to enter, even you are day trading, or when to enter, even irrespective of
Now,
you
let me
can
say
even
this.
enter low.
Are you based
Why
in
is even
Nigeria,
high.
Abimbola?
Yes, I am.
Why do you sound like somebody who's based in London like this? You're rich. Anyway, let me say, I've literally got 5 minutes, but let me say a few things. So a few things I'm trying to say. You've got to think about your focus. And what's the focus? The attention is actually mostly towards Nigerians, okay? And when I'm dealing with Nigerians, you've got to be careful with the market. Okay, the market turns. So if you're teaching them, I mean, I do teach people how to trade on my course, and I do a lot of trading on my mentoring club. I do day trades sometimes, but mostly as swing trade, because people tend to copy trade me. And in Nigeria, where it's difficult to get. Do you get what I mean? And you know this. It's
I understand really.
With day trading, very easy to lose your money. So that's why you would rather advise people the patience investing, rather growth trades. I've got a friend who's got more than $1 million, but at the same time, you want to grow.
I understand.
So if I keep talking about no guys, let's just sorry, I've got a friend calling me. Sorry, Michael, I'll call you back just on the webinar. Thanks. Okay, so if you do tell people to day trade, cut your loss at 10%. I mean, on average,
I'm not really advising people to. I'm not really advising people to do that. I'm just saying that it's good to learn about. We're talking about due diligence. Really, I believe technical is also a great thing. We need to really look
critical.
into.
In fact, you and I need to talk.
It's key.
I need to have a webinar with you. I need to have a session with you, actually. Yeah, due diligence very key. That's very important, number one, and you're right.
All right, no problem. So I'm at the service boss.
It's very important. But the other thing is when it comes to this thing about due diligence, by the time I tell people to cut their loss 5%, 8%, for example, I did a poll on Bamboo a while back, a few months ago, and what I realized was that majority of the people only have $250 in their portfolio. So if you think about it, how can you grow to $50 in a very short time? Because there will be a time whereby nothing will go right. And what are you going to do at that time? Ask people in my mentoring club. There are times whereby nothing goes right, and I'm just telling them, just calm down. And there are times, for me personally, last week, I made 100% on 3 of my trades in the same 100%. So this thing still happen whereby your fingers just like gold. You see my screenshots sometimes, don't you? And that's the thing. So it does happen like that, and you just have to understand. Someone saying, when you buy, what does it mean to buy a call? Options is just literally, no, outside the scope of this conversation, just leave it that way for now. Yeah, option is derivative. You're more or less speculating on a stock, and you're not actually buying that stock. Okay, but yeah, let's leave it from now. You will lose your money on that one if we start talking about it right now without you having that knowledge. But let's leave that for now. But yeah, and someone's asking me about REITs, real estate. I actually did a YouTube video on 2 real estate, and I can't believe nobody's seen that. Well, some people have seen it. And, someone said he's invested. It's got 74% since I did it. That was about 3 weeks ago. So, sometimes you just need to look for information out there. Walk in community, ask people. And guys, let me not lie to you guys. It's very important you take a course. I'm not lying. It's not about me money. The course is priced cheap enough. If you don't know what you're doing, take a course. If you cannot afford the course, just keep asking questions. Sometimes these platforms get very noisy. And of course they do get noisy, but don't just think, oh yeah, because it's so noisy, I'm just going to leave it. You will filter through that noise and you will get some real keywords out there. Trust me, you will. And that's the thing.
Yeah, that's true. Yeah, that's true.
So,
really.
You've got to be in the community of investors. And, I say people, show me where you are, where you spend most of your time, and I'm going to tell you your future. And that's just the way it works, And I say, show me your friends, I'll guess your bank balance. That's just the way things are, really. So, but anyway, do we have one more question and I'll go? One more question and I'll go. Or no question.
Brother Skipper.
You started.
Hello. Good evening. Good morning.
You started.
This one that CTCF is wearing Nike shoes. What's the gist?
I made a YouTube post on TT Tattoo Chef as well, didn't I? Yes.
Yes.
There you go. I made a YouTube post on it.
Yes, I watched it. I watched it back then, and that was I bought it on that. I bought it. Yeah,
Exactly.
yeah, I did that. But but afterwards it dropped. It was just coming out, bleeding and bleeding. But this one that is just running now. So I'm just wondering, what's up?
So you've got to be patient. You need to learn how to take profit. Good thing is you've been on my course. So if you don't know how to take profit, I'm going to charge you for it. Okay. So yeah, learn how to take profit. And what else can I say? Just be patient. Just be patient. That's all I can say. Be patient. Okay. But somebody asked for the YouTube handle. It's the Wealth Hack. Let me actually find the YouTube handle. But yeah, like I said, guys, you've got to be among investors. Otherwise, you will lose out ultimately. Let me just drop the YouTube handle for people who don't know. So that's my channel. So it's not about self-promo. Some people think, if you're there, we're not just there to waste our time, guys. Just understand that we're not there to waste our time. Okay, join investors and you see your wealth grow gradually. Right, I've got to go now, guys, but I've got to say thanks for being with me. Thanks for spending your time with me. It's actually it's a 2-hour moment that I'm going to say, I value this moment. So yeah, thanks everybody, and enjoy your weekend and Merry Christmas in advance, guys. Thank you. Bye-bye.